Hi and welcome to Westpac London's end of day report for Thursday, December the 22nd. Well, equity market sentiment in Europe today started off quite positively. Hard to really pin down a firm reason for it. Certainly the economic news that we had released was pretty minimal, just an upward revision to third quarter GDP growth for the UK from 0.5 to 0.6%. But an offsetting downward revision to Q2 from 0.1% to 0 to flat. The annual growth rate was unchanged at just 0.5%. And business surveys actually suggest that the economy in the current quarter might actually be stalled or even contracting slightly, with a mild recession actually pretty possible on our view, and indeed the Bank of England's view, heading into next year. But there was no European data of note. Nevertheless, equities were pushing higher. US economic data then came out and it was mixed. We had a downward revision to third quarter GDP growth from 2% annualised to 1.8% annualised. The main driver of that was a lower estimate for personal spending on services, with a bit of an offset from less drag from inventory rundown. Other US data was stronger though. Initial jobless claims, which is a measure of the extent to which people were being laid off, I suppose, a proxy for that, were down 4,000 in the latest week to 364,000. Remember they were running at 400,000 plus up until just a few weeks ago, so there's been a clear step down in that indicator of the labour market, lower numbers being better. And that's also, that figure was relevant for the survey week for the December payrolls report. So we're going to see probably forecasts for payrolls revised up. I mean, Westpac's forecast for December payrolls is I think 150,000, which is a little bit above the current consensus. We'll probably leave our number where it is, our forecast where it is. Also, consumer sentiment was revised up on the University of Michigan's final read for December. So we've now seen in 4 months something like a 14-point gain in that particular sentiment index from the lows that it actually reached during the equivalent to what it reached back in the 2008-2009 recession, to just 4 points or so below the recent peak for that series. So a very strong recovery in sentiment, although I got a caution that we saw exactly this sort of recovery in sentiment in the middle of 2008, of course, before the US economy slid into recession. So stronger confidence doesn't necessarily mean you avoid an economic slowdown if some event happens to undermine that confidence again, such as happened with Lehman Brothers in 2008. That's other data of leading index in the US, another gain there, but not as strong as in October. November was up just 0.5 versus 0.9 in October, and a few other minor bits and pieces. So that's really about it. Nothing really fresh in terms of Fed commentary about the potential for further quantitative easing. The ECB's been fairly quiet today. So just remains for me, for the last time this year, to run through some numbers for you. We've got at the close, the London market, the FTSE is up 1.25%. The French market's up 1.4%, and in Germany we're looking at a 1.1% gain. And at about 5 p.m. London time, the Dow in the US is up 0.3%, and the broader S&P measure up 0.5%. In commodity markets, we've got gold down around 0.5%, but most other commodities are higher. For example, we've got oil prices up 0.8% at $99.45 a barrel, and copper prices are up about 0.75% as well. The Aussie dollar is comfortably above 1.01 against the US dollar, and has been for most of today's trading session. All right, as I said, that's it for the year. We'll return with these video reports sometime early in January. Thanks for your attention, thanks for your kind comments, and all the best to you and your families for the season.